Hi everyone, let's go over my low time frame and micro bullish and bearish Elliott Wave scenarios on Bitcoin. Starting with my low time frame bearish scenario, where we're still expecting a move to the downside in a WXY, with the most common target area of wave Y being between the 1 and the 1.236, taken from the high to the low of W to the high of wave X, sitting between 29.4k and 28.9k. And that is quite interesting because there's confluence over here with the blue target box that we have for support between 28.8k and 29.1k, and in case price likes to go a little bit deeper, we have an additional support between 27.8k and 28.2k. Now after wave Y is then finished, we expect a continuation of the trend towards the upside. In the bullish scenario, we don't expect another low to be made. We want to see an impulsive structure to the upside after then a three-wave corrective structure is finished. However, there's a little bit of a problem going on. Usually, if we look at impulses, right, what you want to see in a potential wave 1 is a 5-wave move. So a 5-wave impulsive structure to the upside. A wave 1 can also be a diagonal, meaning you have contracting trend lines and then you have a 1, 2, 3, 4, 5, something like this, before you then get a wave 2 and then continuation in a wave 3. But as you can see over here, we don't really spot a 5-wave move to the upside in a wave 1. But spotting a diagonal is also no-go because we count 3 waves over here and we can't really see any 5-wave structures. And this sideways move is already taking too much time for a potential contracting diagonal. So in my case, that means that the low time frame bearish scenario, with eventually a bit more downside expected, has a higher probability. If we then go to the micro bullish scenario over here, we're also looking for a WXY. 3 waves to the upside in a wave W, 3 waves that already ended in a wave X, for then now continuation to the upside in a wave Y. What is interesting in this scenario is that first of all, we had a double top over here, which has been taken, price moving to the downside, to take a double bottom over here, always looking for liquidity, right? Liquidity over here, moving down, grabbing the double bottom, grabbing that liquidity for then a move up, back testing this double bottom over here at 30k for then this move to the upside. And now if we look towards the upside, we still have a couple of highs, high number 1, high number 2, and high number 3 for actually a triple top instead of a double top. And also right above this level at 30.5k, we have a blue target area, which is an important resistance area, sitting between 30.5k and 30.7k, with a couple of nice confluences that you can see over here. So after wave Y is then in, we expect a continuation to the downside to then finish the low time frame bearish scenario, right, for the bigger wave Y, before then eventually a continuation to the upside. If we go to the micro bearish scenario, then we are looking for a WXY that is already finished, and we're now looking for downside already. Now in this particular scenario, this then has to be a 3-wave or an impulsive structure to the downside, but by all means, honestly, the invalidation is if price is going to take this high over here, sitting at 34.50, because if this high gets taken, then in my opinion, we're going to go a little bit further to the blue target box, or at least take the other highs as well, before then potentially a move to the downside. The resistance area that we were looking for today mainly was that daily naked point of control, as mentioned in the morning as well, the other 2 updates today, which was a very important resistance area for price, because if this is going to act as resistance, we could move to the downside towards that daily level at 29.9k, which is still untouched, with also a little bit of a double bottom over here. We have a higher low in price. As you can see over here, this second low over here is a little bit higher. So we have a double bottom right above the daily. So that's quite interesting. But we were going to observe what price is going to do around this resistance. And in order to actually show you what price has done, I always like to look at the CVD divergences. And if we look at the CVD divergences, and before I zoom in very, very locally, I want to talk about the bullish CVD divergences that we still have over here. Higher low in price, lower low on the CVD divergence, which I will show you in a second. Target is this high. And if we then zoom in more locally, Then we also had a little bullish divergence over here, which already played out as the target has been taken. And now more locally, if we go to the 5 minute, then you can see we actually have some bearish CVD divergences, lower high on price, but higher high on the CVD. This low over here is the target, which I actually have to zoom in to see if the low got taken, but this low did not yet got taken, at least on my chart, which is the Coinbase chart over here. Funny enough, on my AGGR chart, which is the CVD chart, this low over here, this one has been taken, which I'll show you in a second. And now we see the bullish CVD divergences, higher low in price, lower low on the CVD. If I zoom out quickly, then you will see the bullish CVD divergences over here, higher low on price, lower low on yellow and blue, the two CVD lines, where then the target is going to be this high over here, as this is the highest high made between the two lows, so that is going to be the main target. If we then go to the 5 minute, then you can spot over here, higher low in price, lower low on the CVD, bullish CVD divergences, price continuing to the upside, nothing too crazy. And now where we are at the moment, we can then spot a lower high on price and a higher high on the blue CVD. But as you can see, this candle, this green candle over here, wicked below these lows. And that's important because on my AGGR chart, this bearish CVD divergence over here in blue already played out because the low has been taken, which means that the bearish CVD therefore is neutralized on this AGGR chart, on the CVD chart. And we then have the bullish CVD divergences left, which is a higher low in price, but a lower low on both the blue and the yellow line, where then the target is going to be this high, meaning the target is then going to be this high over here for continuation above the daily naked point of control at 3,300. It does mean, of course, we first have to go above the daily naked point of control and not see tests like this, right? We want to see a move like this towards the upside. But yeah, on the AGGR chart, we do have some bullish CVD divergences. And even if we go lower to the 3 minute, you can see that price moved to the upside, came down. Once again, you see on yellow, bullish CVD divergences, higher low on price, lower low on the CVD, but then maybe even more locally, lower high on price and higher on the CVD. So the lower you go on CVD, the more confusing it becomes. I do prefer myself to stick around on the 15-minute time frame because it just gives a lot more peace and there's less happening. But I do know scalpers like Dr. Wolf. He's in the group as well. He's in Silver, he's in Telegram and in Discord, Silver membership that is, and he is a scalper using the 1 minute for this CVD chart, and he does that very, very well indeed. If we then go to the news, we do have some news this week. On Wednesday, 2:30 p.m. and also on Thursday, 2:30 p.m. we have high impact news indicated by the red flags, as you can see. So make sure that around these hours, you're going to be trading safe with your stop loss, your plan, your strategy, whatever you are looking for. And then finally, if we look at the probabilities of the scenarios I just mentioned to you, then on the low time frame, my preferred scenario is going to be the low time frame bearish scenario, where we're going to be looking for a move towards the downside to reach at least the 29k level, which I think is quite interesting. And on the micro, my preferred scenario is the more bullish scenario, where we're going to be looking for this wave Y to the upside, either in a three-wave structure like this, right? Because a wave Y is a three-wave structure, so we can expect something like this to happen, or directly. It doesn't really matter. We have to wait and see what price is going to do, but at least take the double or triple top that we have and reach the blue target box. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye-bye.